Hello everyone. Welcome to the part 2 of the online lecture series on financial management. Today we're going to discuss what is form of business or various forms of business. Okay. In this video, we'll discuss about how various forms of business influences the financial management decision and what are the factors that differentiates these various forms. My name is Prasenjit Roy. I have qualified PhD, NET JRF and MCOM in Accountancy and Finance. Presently, I am engaged as an assistant professor at the Pune Institute of Business Management in Guwahati campus. So as we have already discussed, first is financial management. Financial management is the process of efficiently handling money and monetary resources and allocating them to the various departments in order to generate more profit as well as create value for the firm in the long run. The basics of financial management are the same for all the businesses, whether it is large or small, regardless of how they are organized. However, a firm's legal structure, when you talk about legal structure, it's the law by which they are incorporated. Legal structure affects the operations, and thus we should consider this unique nature of legal structure of these forms of business in order to efficiently adapt to the financial management decisions. So what are the four main forms of business? Okay. The first form is proprietorship. Second one is partnership. Third one is corporation. And the fourth one is limited liability companies or limited liability partnership, LLCs or LLPs. Okay. So what is proprietorship? Proprietorship is any business which is established by only one individual. Okay. Established by one individual. Partnership is a business which is established by two or more individuals. Corporate or corporation is a legal entity that is established under Companies Act. Okay, Companies Act 2013. Okay, partnership is registered under Partnership Act 1932. So proprietorship can be either registered with municipality, okay, or it can be unregistered often at times. A limited liability company or limited liability partnership are a hybrid form between partnership and corporation. Okay. They have a characteristic known as limited liability. Limited liability, which is related to the characteristic of corporation. Okay. But they function as a partnership. There might be two or three persons or more persons who are establishing a limited liability company or limited liability partnership. This is the cross kind of thing between partnership and corporation. In partnership, the liability is unlimited. The liability is unlimited. We'll discuss this limited and unlimited. So let's begin with proprietorship first. So when we talk about proprietorship, any business such as started by one individual, any business from a small tea stall, okay, from a tea stall to a doctor's chamber or a shop is regarded as sole proprietorship. Okay. Is regarded as sole proprietorship. Okay, the risk is undertaken by only one individual. Undertaken by one individual. Profit is earned by one individual. Okay. Then cost is borne by one individual. Okay. Decision making is done by only one individual. Okay. Decision making done by one individual. Okay. The expansion of this kind of business is small. Okay. Okay. So if you consider this kind of any neighborhood doctor's chamber or shop or tea stall, you will see that the market to which they cater is especially regional or local market. Okay. Since they are sole decision makers here, the risk which is undertaken by only one individual is limited. Okay. That's why they will be based in a small market. Okay. Especially local market or regional market. So, but when we talk about partnership, see, partnership has two or more persons. Okay. So here what happens? The risk is shared by partners. Okay. Cost is also shared. Okay. There is a partnership deed without which the partnership will not exist. Okay. Decision making is done collectively. Profit is shared. Okay. Etc. So all these characteristics are taken up here in a comparatively larger way. Okay, expansion is a bit larger compared to sole proprietorship. Okay. So now when we talk about corporation, so see, corporation is basically a company or a business enterprise which is registered under Companies Act 2013. Okay, so basically under Companies Act, a business enterprise needs to be established to be called as corporation. So we have private companies, public companies, okay, joint stock companies. Okay. So when we say stock, okay, basically it deals with equity shares. Okay, equity shares. Okay. So these are nothing but units, okay, of ownership. Okay. So here owners can be, okay, owners are basically more than one. It can be 100,000, okay, lakhs. Okay, so there is no limitation with the owner, okay, number of owners. But one particular thing that differentiates all this business is liability. Okay, liability means the payment or the capacity to pay or the right which is enjoyed by the creditor for receiving the payments for the money that is owned by someone. Okay, in this case the debtor. Okay, so here when we say limited liability, this particular thing refers to the limitation, okay, limitation, or you can say a right enjoyed by the equity shareholders okay, by which they will pay the dues only to the extent of their share price, okay, only to the extent of their share price or share value, okay, share value, not beyond that, okay. In the event of liquidation, that means when the company is winding up its operation, okay, here we'll a partnership, proprietary, proprietorship, partnership, and corporation. So suppose in the event of winding up, here there is one person, okay, one person. Here there are two or say that is 3 persons. Okay. Suppose Mr. X. Here X and Y. Okay. Here Mr. X. Also suppose this is Mr. A is holding 1000 equity shares of rupees 100 each. So that means it will be around rupees 1 lakh. Okay. Now, say suppose this I am explaining you what is limited and unlimited liability. So, say suppose creditors own, okay, creditors they own rupees 1,20,000. Okay. Here also is the same, rupees. Creditors are owning rupees 1,20,000. Here also it's 1,20,000. Okay. Now Mr. X has within its business only rupees 1 lakh. Okay. So you will be able to pay only 1 lakh. So balance you will have rupees 20,000. Right? So these has to be paid by Mr. X beyond the business, okay, beyond the capacity of the business, or you can say from his pocket. Okay, this liability is unlimited. Okay, this liability is unlimited. So as per this, Mr. X has to pay it from his pocket. Here the concept of separate entity is not applied. Okay, separate entity is not applied. Mr. X and the business will be regarded as the same entity. Hence, whatever amount is owned by the business is owned by Mr. X, is owed by Mr. X. So, hence, if he is short of 20,000, okay, and he is not able to meet the requirement from the company's accounts, he has to pay rupees 20,000 from his pocket. Okay, this is where unlimited liability clause is adopted. The same applies with partnership also. Okay, if say suppose X and Y has in their business rupees 1 lakh, okay, after paying this amount, rupees 20,000 again remains to be paid. So this has to be paid from Mr. X and Mr. Y's pocket. Okay, this is again unlimited liability. Okay, unlimited liability. So here also the same thing is applied. Okay, separate entity concept is actually not regarded here. Okay, separate entity is not considered. Is not considered. Okay. Now, when we consider the same thing in corporation, what happens? Suppose 1 lakh has been paid. Also, forget about 1 lakh. Here, corporation is registered under Companies Act. Okay, under Companies Act. which gives a right to the shareholder of limited liability. Okay, limited liability. So as per this, Mr. A will not pay remaining 20,000 from his pocket. Okay, he will only pay rupees 1 lakh, the maximum value of the shares that he is holding in the company. He will not pay additional rupees 20,000 from his pocket. This 20,000 has to be liquidated from the assets, assets of the company. It's to be recovered from the assets of the company. But Mr. A will enjoy the limited liability, right of limited liability, where he will only pay 1 lakh, because this is the value that he is, holding in the corporation. He doesn't held 1,20,000 shares. He is only holding rupees 1 lakh share. So he will be paying only 1 lakh, not 1,20,000. This clause, unlimited liability and limited liability, differentiates between proprietorship, partnership and corporation. Okay. Here again, another thing is, in proprietorship, taxation is considered as personal individual income. Okay, income tax is applied. Okay, same is with it partnership. Here also income tax is applied. Okay, but in corporation, corporate tax is applied. Corporate tax is applied. Income tax is not applied. Okay, the rates will be different. Okay, and the income and corporate and dividend tax is also applied. Okay, dividend tax is also applied. Here it will be considered as individual or personal income of the proprietor. Okay. Apart from this, we will also observe that, since we have already discussed risk is different, here also risk will be different, right? So when we see all these things, risk, cost is different. Okay, these all are the factors which affects the financial management decision. Okay. So these are the few factors that differentiates financial management among the various legal structure. Okay. So when we talk about limited liability partnership or limited liability company, it's almost the same, but we need to apply there that when we talk about limited liability partnership or limited liability company, it is a hybrid between partnership and corporation. Partnership and corporation. So where this is applied? Basically, these are applied in accounting firms. Okay, accounting firms or architectural firms. Okay, or basically we can say it's more about professional firms. Okay, like law firms. Okay, IT firms, etc. So everything here applies as partnership. But only with the clause of limited liability. Okay, we should always remember limited liability, not unlimited, like our usual partnership business. Okay, and here taxation is applied as with the rules and regulations laid down by Income Tax Act, not as corporate tax. Okay, so here Now we understood that the few factors such as risk, cost, returns, okay, scaling capacity, okay, legal structure. These are the factors that are responsible for financial management decisions among the various, okay, among the various forms of business. Okay, proprietorship, partnership, and cooperation. So risk is different, cost will be different, return will be different, the same way scaling capacity will be different. All these factors affect the financial management decisions. Okay, financial management decisions. This is where a financial manager should consider in adapting to the particular business form and applying proper techniques, okay, which will be beneficial for the firms. So with this, we may conclude that risk, cost, return, scaling capacity, legal structure are the important factors that help us to understand the nature of these various forms of business and how they are going to be different for different firms. Okay, and it should be considered by the financial manager in order to perform his managerial duties in the most efficient and effective manner, so that it creates and generates profit for the company, and also it remains to be rational for the investors in order to judge whether their company is profitable or it's going through a challenging phase, okay, or going through a loss. Okay, so these are the few questions that I have prepared. It will be helpful for your understanding. So what are the various forms of business? Relate them with few examples. How financial management will be different in each of these forms. Send in your answer via email to thealttutor@gmail.com. I hope this video was helpful for you in order to understand what are the different forms of business. In our next video, we'll discuss about the economic value or the value of shareholders. Okay, that is one of the priority for financial management, one of the primary goal of financial management. Thank you for watching. Please subscribe, like, and press the notification bell for more updates. And stay tuned for the next video.